Mr. R.S. Sharma, former CMD at ONGC, joins in. Mr. Sharma, hi morning. What sort of a breather to OMCs is the recommendation of continuing with trade parity pricing for diesel?
Look, I have seen in my service time, my experience in this sector, multiple reports coming. Kirit Parekh report. Earlier we had a Rangarajan committee report on this product pricing itself. B.K. Chaturvedi committee report. Kirit Parekh report. And we find, the sanctity of these reports have to be taken due credence by the government. And once these reports come and recommendations not getting implemented, that puts a very big question mark, on the sanctity of these committees itself. You see, I genuinely and sincerely feel that the recommendations of this committee should get implemented. If not, to my perception, raising the diesel prices by 5 rupees a litre or 4 rupees a litre in one single shot, I don't think that is feasible. It has never happened in a country like ours. But at least they should, the decontrolled product prices, they get adjusted every fortnight. So let there be every fortnight 1 rupee increase in the diesel prices till the time this, Kirit Parekh committee recommendations are get implemented. But the moot question is to give the sanctity of this report. Per se, for the government, because of the political implications, it doesn't become, feasible to take unpleasant decisions. When these committees like these constituted, and they are economists of very high eminence, when they give recommendations, so there's an adequate reason, justification for the government to take such kind of unpleasant decisions. So I feel, first of all, the recommendations of, Kirit Parekh committee for raising the diesel prices and capping the subsidy at 6 rupees a litre has a lot of, I feel, rationale.
Mr. Sharma, do you think IOC's disinvestment process will be better received as a result of some of these recommendations, and this is a crucial exercise the government is looking to undertake at the earliest?
Well, first of all, the investor goes by the sentiment, and getting implemented this issue, per se, I said it is not an issue. There should not have been all the tussle, all the disputes on the trade parity. Trade parity is the right approach for these PSUs, considering that, social objective they meet in, distributing the petroleum products in every nook and corner of the country without any disruption, maintaining their distribution lines, the marketing, the storage network. All these things are not done by private companies and the coastal refineries. So one has to keep these factors in view, and I see no reason why the finance ministry at all raised the issue of that import parity. So that export parity, the issue of the trade parity that has been decided, that should get implemented, and at least that will address the sentiment for the investors in the Indian Oil Corporation. It will give some, somewhat more reasonable price to the government in terms of the divestment process. But again, if we look at the kind of under-recoveries this company has been having, their share price is highly underpriced. So this was not the right time for going through the divestment, and as I take it, the government take the relation through this 5% divestment is not going to be a representative price. It's going to be much lower than what the price of share price of this company should command in the normal course.